What's going on, everybody? Welcome back to the Invest in Wealth channel. Today's video we're going to be doing a portfolio update. We're going to take a look at the trades I've did today. I cleaned up my portfolio quite a bit. I still got a bit more work to do in the upcoming week, but I'll show you guys what positions I sold and what I bought. Starting off, we made some major changes in my US personal account. I picked up about $2,000 worth of Apple here in US funds. So I did sell off quite a bit of my other US stocks that I own, kind of consolidated everything, you could say, and just bought Apple there. So let's take a look at my activity for today. I did sell my full Visa position, my full Qualcomm position, my McDonald's position, my Amazon, my A&D, and then we did pick up a bunch of Apple. In my non-registered account, I trimmed off the split share of ENS. ENS, for some reason, has not been doing very well the last week. As you can see, down 8%. Not really sure why this is. It's normally not as volatile as Enbridge, as it is the split share. But I did decide to take off some of my position here. I sold about 200 shares. Not sure what I'm going to do with the rest here, but we'll wait and see on that. But I still am earning about 12% on that shares there. So nothing to complain about, but really upset with how that stock has been performing recently. So I did sell about 2,600 shares. Next up, I did get some more Apple. I did make a big change to one of my top holdings. ZWC, I used to own about 550 shares. I sold about 225 here. We can take a look at ZWC. This is a Canadian high covered call dividend ETF, basically. About 7.7% yield. This ETF hasn't been really doing too much for us in the last year here. We're down about 11%. It did provide us with some good monthly income, but my thought process behind this trade was, why would I pay someone 0.9% management fee, I should say, to just mainly buy the stocks I already own in my portfolio? It really did not make sense. I could buy bank stocks almost at about 7% yield. It doesn't take a genius just to buy, the top 5 banks, the telecoms, Bell, TELUS, our railways, our insurance companies. Didn't really make sense for me to be paying an MER fee when I could just do those trades myself. So I am going to be selling probably this whole position here in the upcoming week. So stay tuned for that. That'll give us free up a bit more cash for us to buy some more growth stocks. Maybe depending on how the bank earnings are, because those are coming up next week. Maybe buy some more Royal Bank, TD, Bank of Nova Scotia, something like that. Because I'm expecting those to dip on their earnings. Moving on, Bell and my non-registered picked up about 25 more shares. This was below my average price. It's a screaming good deal. Picked up about 25 more shares there. Added to my position in Royal Bank, about 10 more shares at about $120. Added a little bit more in Bank of Nova Scotia, as this stock I believe is super undervalued right now, and the yield is almost touching 7%. So can't really pass up an offer like that. ZWC, again, like I was talking about, sold about 25 more shares there. Non-registered account, we did add to our VFV position. So we got about 5 more shares there. And we added a new holding in my non-registered account, CNR, for a bit of a growth stock. Picked up 4 shares there. We're looking to add a bit more to this position in my non-registered. I do own some shares in my First Home Savings account, but that account is maxed out, so just kind of shifting things around in my non-registered there. Then I did a deposit, about $1,500 US. This costed $2,000 flat. So how I kind of leverage my US account, I buy it through my bank first. I have a US dollar account in my bank, and then I transfer the funds over to Wealthsimple, so I do avoid the conversion fee. And then I buy the trade straight up in US dollars, so I don't pay any fees at all. And since I'm a premium client at Wealthsimple, they do give me free USD accounts, which is awesome. So in that US account, we did buy another 7 shares of Apple, and we did do a fractional buy in Microsoft. So we bought about $363 worth of Microsoft there. In my US account, I'm really looking to hold quite a lot of Apple. I would like to own probably at least $5,000 worth US in Apple. So over the next couple weeks here, I'll probably be doing some US dollar deposits, as Apple has, I will be buying Apple on this dip here. It was at about $200 a share. Now it's at about $177. So if this drops below 170, you best believe I'll be picking up some more shares. They do provide a small dividend, about 0.5%, but I expect strong results in Q4, as it normally does. They are releasing the iPhone 15, and it is back to school time plus Christmas, so I am expecting a big jump for their Q4 results. So kind of my future goals with this portfolio, I'm really kind of striving away from the maturing dividend stocks here in Canada that don't quite have a lot of growth, but they do have high yields. I'm kind of shifting my portfolio more to the US growth side. I'm slowly doing that. I'm buying ETFs like VFV, TXF, picking up some just straight up Apple shares, really looking to gain that US growth exposure, as well as I am keeping some of the big dividend stocks here in Canada, like Bell, Bank of Nova Scotia, Enbridge. Still going to be holding on to those positions just for my income that I get, which helps with the compounding interest. I do love seeing those nice big dividends roll into my account, but where I am in my time frame, I feel it's a smarter move to invest more in growth stocks and growth companies. And there's no better market than that than the US market. So these are the ETFs I'm talking about. TXF, VFV, and then our straight up Apple shares, Microsoft shares. I'll be looking to build my positions in those. So let's take a look at how I am doing the last about a week here in my non-registered. So last week it was almost every day was in the red, mainly because of inflation and it's earnings season. So it's a very volatile time in the market right now. So my non-registered account, I'm down about $2,700 or 3%. My US side, this is not accurate just because I made that deposit, so we will ignore that and we will hop into my tax-free savings account. The last week we are down about 1% or $400. My first home savings account, we are down about 2% or $134. And in my RRSP, we are down about $100 or 1% the last week. So that puts our total portfolio value at $142,140. I do have a small crypto account as well, just for speculation. But I am going to talk about the big trade today, why I decided to sell my long-time holding ZWC. We're going to kind of dive a little bit deeper in this. So this is the BMO Canadian High Dividend Cover Call ETF. I've owned this for the last couple years now. It's provided me with reliable monthly income. But I did decide today that I'm going to sell the rest of my entire position here, mainly because my reasoning, why would I pay a 0.9% management fee if I can just purchase the shares myself, pay no fees, and since this being a covered call ETF, it does kind of reduce the growth a little bit because not the full amount of this ETF is actually in stocks. I think it's about close to 70% in stocks, and then the rest are calls where you see that's why they have the big income. But let's hop over to ZWC's portfolio holdings, and I'll kind of compare it to my own portfolio. Okay, hopping on over to ZWC's fun facts here. As you can see, the top 10 investments, I think I own almost all these stocks already. Top 10, Bank of Nova Scotia, TD, Royal Bank, Enbridge, Bell. So their whole top 5 holdings here, which makes up about 25% of the ETF. I already own a lot of these in my portfolio. Moved on to CIBC, Manulife, CNR, CNQ, TC Energy. I already own quite significant amount of these stocks in my portfolio already. So I don't really see any value in paying BMO 0.9% as a fee when I could just go out and buy these stocks myself. So that's why I did make the sell today. I think this will help me out in the long run. I will miss that monthly income, but it'll just kind of add to my quarterly dividends. So it'll be nice to see there. I think this stock was paying me $55 at the start of the month, but it's nothing too crazy. So I think my money is better off just straight up holding the company's shares on its own. So that's why I did make the switch. Let me know your guys' thoughts in the comments there. I'd love to hear your opinions and if you guys would do the same. But let's hop back on over to my portfolio. All right, so that kind of wraps up my little update here today. Hope you guys learned something new. Hope you guys enjoyed the video. Let me know what stocks you guys are buying in the comments below, and I'll see you in the next update. Thank you. Bye.